Bank of Canada, surprise rate hike. Federal Reserve, we're hawkish. ECB raised. Bank of England raised rates. The only key countries that's cutting rates is China, because they're in a secular decline and they're going to be facing a recession from the rest of us. So the key thing is, let's look at the next meeting now, July 26th. We're at 70% that they're going to go 25, and that's the key point that I think the market doesn't get yet. Is this is the big cat and mouse game between the stock market and the Fed. And the Fed is not going to ease, in my view, ever, probably ever, until the stock market tells them to.
From cautious pauses to gradual interest rate increases and cautious stances, the world's largest central banks expressed contrasting approaches to monetary policy last week. Earlier this month, McGlone warned that the latter half of the year could bring challenges for cryptocurrency assets and equities, as he believes the Federal Reserve remains committed to raising interest rates. Anticipating an economic downturn, McGlone suggests that risk assets like stocks and cryptocurrencies could experience a decline in value in the coming months. According to the macro strategist, the Federal Reserve's continued pursuit of interest rate hikes poses a potential threat to Bitcoin and other cryptocurrencies. McGlone believes that during recessions, risk assets often become more affordable, presenting an opportunity for investors. However, the interplay between a surging stock market and vigilant central banks could complicate matters for risk assets, particularly cryptocurrencies, known for their high volatility. The inability of the Bloomberg Galaxy Crypto Index to sustain levels above its 2018 high in 2023 might be indicative of valid concerns. McGlone points out that the Fed's tightening measures, rising commodity prices, and the performance of the stock market all play a role in shaping the crypto landscape. In light of these factors, McGlone suggests that Bitcoin may not live up to its initial hype, providing reasons to support his assertion.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
A bit of a worst case, kind of a delusional stage where the market hasn't figured out yet. So I like to point out a few facts. Went back and just figured out a little bit. You watch markets versus a 200-day moving average, and sometimes it gets too cheap, and sometimes it gets too expensive. So right now, the Nasdaq is 23% above its 200-day moving average, and that's since 2000 when it had that all-time high. It's only happened on 3 separate occasions. It almost always comes after it goes down a lot. Moving average tilts lower, and then it points back out again. The point is, it virtually never stays that high above a 200-day moving average. It's never happened with the curve this inverted. So that point to me is what the market doesn't get yet. Is it's priced for all this normal human nature, optimism and hopium. They just forgot that the last almost 30 years, every time the market went down, the Fed was there to save you. This time it's going to be pointed out clear from all these Fed governors that we're not going to save you. We're focused on inflation. My forward-looking measures like PPI are collapsing, commodities are collapsing, but we're focused on our measures. And I don't see a win-win here for risk assets. Yes, I've been wrong, but now this is the way it always happens. You have to battle. You have to get that periods where people have, I think, irrational exuberance with a lack of fundamental understanding, meaning this is an economy that's just tilting towards recession. The Fed's going to make it go that way, and it's not going to save you until the stock market goes down. What did people get wrong a year ago, starting with crude oil? Initially wrong right away, and then it turned out that way. Why did the vast majority of people expect it to stay above 100, and it's at 70, and still things like natural gas collapse? Because they missed the demand pull side of what's happening globally. Now, when's the last time we heard an upward revision of demand pull estimates from China? It's all trickling down. So that's a secular decline in this economy that just blasted off in the last 20 years. It is, we all know it's way overdue. Every single economy in the history of mankind, when it goes up that fast, has a significant correction. So that's just getting started. So let's look at its 2 main places what exports to. Now they're high now, but the thing I do on weekends is, some of us do, is I study and listen, read everything I possibly can. I hear a major divestment. Everybody's doing whatever they can to get out of China, and China's even doing what they can to get their manufacturing over to Mexico. So their main 2 clients, U.S. and Europe, not only did they obviously get them upset with this war, but they're going to a recession. What stops us? Well, they're all raising their rates. Why is China cutting their rates? So that to me is the beginnings of a global economic slowdown. Now, probably a recession. It's just getting started. The key thing is there's nothing here to save it at the moment. And then I look at things like, well, Bloomberg Commodity Index, it's collapsed. You look at producer price index, they've collapsed. Copper's going down. All these things that are really supposed to relate to that global economy. And then, so to me, the fact is they're still priced for tightening.
As per the market strategist's analysis, the surge of Bitcoin above the $30,000 mark this year could be viewed as an exaggerated rebound within a broader bearish market trend. This pattern has historically shown how Bitcoin experiences booms fueled by liquidity, followed by busts when the liquidity support is withdrawn. Consequently, the strategist suggests that Bitcoin's trajectory is inclined to align with the downward sloping 52-week average, indicating a bearish outlook. The strategist highlights that despite the potential consequences, the Federal Reserve has proceeded with 2 rounds of tightening, which could be seen as a display of the central bank's determination. The decline in copper prices and cryptocurrencies seems to echo this cautionary signal, in contrast to the resilient performance of the stock market. Furthermore, the strategist, Mike, shares his perspective on Bitcoin, questioning its purported greatness by pointing out its failure to outperform the Nasdaq index.
Fact is, for commodities to bottom in this environment with the number one source, demand pull source for the last 20 years trying to kicking lower, is you basically need a long and variable lag to Federal Reserve easing. That means you need basically a weaker dollar, you need the Federal Reserve, that lower plateau. We're so far away from that, if history is a guide. So now I ask people, then if you expect commodities to go up, so what's going to cause that? Were you the people who were bullish last year? That's what's happened. We're in the early days of the supply and demand elasticity kicking in. We still have massive supply of all the production signs are still kicking up because they were a sell forward on the curve for same things like crude oil. And the demand is still ticking downward. It's just getting started. Like I said, the bottom line is right now, virtually every risk asset on the planet, most notably commodities, are completely subject to that stock market. It has to go up just for commodity to stabilize. And what's the risk? The stock market goes down and everything follows, like crypto. So that's the problem. Is it's all about the Fed and monetary supply right now, and they are still tightening. At least they're still expected to tighten. It's not just the Fed. The most coordinated central bank tightening in history is still going on. So when people talk about the end of the banking crisis, I'm like, what caused it? Well, rates are going higher. What really trick, and that's the key thing I'll end with, what really sparked part of this tilt towards still this fight for inflation is that the war in Ukraine spiked commodities, and they're just starting to come back. I'll just give the example. In 1980, the commodity index peaked, and then I think it took until 2003 to take out that high or something. I can look at it now, but it's usually how these things work. It takes a long time. If Bitcoin's so great, how come it can't outperform the Nasdaq? And I say that facetiously because it's a fact. The first time Bitcoin right now is at a ratio of about 1.76 to the Nasdaq. It was first traded that in 2017. Okay, so here are 6 years. If you bought Bitcoin on that day and you bought the Nasdaq in the same day, you have the same return. Yet you get much less volatility in the Nasdaq. You have this broad index. And by the way, typically you get support from the US government. You have the AI exposure. I'm bullish Bitcoin, particularly for what you said about all commodities, every single commodity on the planet, history commodities. People can create more with less every day. And the only really time they go up in the long term is when the currency they're based in is debases, i.e. the dollar. And I can show you how the price of crude oil now is the same price versus gold since 1931, I think. I can double check. It just fluctuates. But the key thing about Bitcoin, it has that definable diminishing supply, which I obviously point out a lot, but that's unheard of, never seen before in anything I've ever seen. Obviously, it has that low adoption and early days. Now, I completely believe in that in the big picture, but if I'm right, which I think I'm going to be about the stock market, and it needs to go down for the Fed to lighten up, then everything's going to go down. Cryptos will go down the most. They're supposed to. They've already leading. They're already kind of telling us there's a problem going down. Yes, there's other reasons. The Fed's cracking down. Why the Fed's cracking down? Well, because FTX went under. Why did FTX go under? Because cryptos went down. You see the connection there? But Bitcoin should outperform. It's just not there yet. And that's why I think we got to get through that period. We can see a decent bear market in the stock market. I mean, that's going to happen in our lifetimes. Maybe not this time, but it should happen probably by the end of this year. It should kick in, and to see Bitcoin outperform. And it's not right now. It's going down more. So I still look at it as I tilt back to U.S. government too. It's until I see that divergence.
The global monetary policy landscape has become increasingly divergent, reflecting different approaches and challenges faced by central banks around the world. Last week, the European Central Bank surprised markets by raising interest rates due to concerns over worsening inflation. Meanwhile, the Federal Reserve decided to pause rate hikes, and China's central bank lowered lending rates to stimulate its economy. Japan, battling deflation, opted to keep its policy unchanged. These varied actions highlight the desynchronization of the global economy, with each central bank addressing its unique circumstances. In Europe, inflation remains high, exceeding the ECB's target. The Bank of England is expected to raise rates following strong labor data. On the other hand, the Federal Reserve, which began its rate hike cycle earlier, has paused temporarily but plans 2 more increases later in the year. China is facing a stalling economic recovery and has implemented support measures, while Japan anticipates a decline in inflation but refrains from policy normalization. The differing monetary policies reflect the central bank's attempts to stabilize their respective economies amidst changing financial conditions. With many economies grappling with their individual challenges, the global economic landscape has become more uncertain and complex. The implications of these developments on individual economies are open for discussion and further exploration. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.